Each year, S&P Global Energy's Food and Agricultural Commodities team releases a December white paper which puts our flag in the ground and lays out what our key predictions for the year ahead are. My name is Peter Story, Head of Prices for Food and Agricultural Commodities, and I'm joined by Aled Thomas, our Principal Analyst for Food Retail and Manufacturing. So Aled, the past few years have been quite fraught for food price volatility, I should say. What with the COVID pandemic, Russia's war in Ukraine, and more recently a bit of unrest in the Middle East, volatility has just been quite high, I would say. So looking towards 2026, what exactly are we expecting for food price inflation?
Yeah, so you're right, Peter. I mean, each one of those has affected food price inflation in its own unique way. COVID, in terms of how we had that big boost of GDP growth after the pandemic, everyone wanted to go out to the shops and buy lots of food. Perhaps they'd saved up lots of money and had that money to spend once they're allowed back out in the open. So we saw these kind of big GDP jumps of 6.4% in 2021, then 3.4% in 22, which meant that ultimately food price inflation was going to jump up because of the amount of food that was being bought at the time. Followed by that then, of course, when we had Russia's war in Ukraine, that not only impacted energy prices, which of course a lot of processed foods and just general logistics pushed up the prices of foodstuffs, not because of the raw commodities, but also the war in Ukraine did impact a lot of agricultural grains, which are a lot of staple foods and staple bases for a lot of the foods that we eat. And then more lately, of course, the unrest in the Middle East has really been bigger on the impacts in terms of logistics. We've seen lots of issues around the Red Sea and just general shooting of and bombing of ships, etc., which has meant that the logistics and getting the food from its kind of origin to our shops in the UK, or whether it be in Europe or the US, has been much more difficult. But in 2026, S&P Global Energy are forecasting that we're actually going to see food inflation tame somewhat. We've had all these big shocks. Of course, it seems like it's calming down a little bit. S&P Global Market Intelligence are forecasting that the average global inflation for 2025 will be at 3.1%. And then in 2026, the S&P Global Market Intelligence are also forecasting that we're going to see GDP growth kind of flatline out at around 2.8, 2.7%, thereabouts for both 2025 and 2026, which really means that the demand is waning off and we're not going to see the kind of big shocks to global food prices. But that being said, it has been quite a big year in terms of specific commodities across the globe being challenged by high prices and some quite a bit lower. We've seen global beef prices being incredibly high. We've seen dairy prices high and then dip off. And we've also seen things like rice shortages in Japan increasing prices significantly over there. So that being said, as a whole, we're forecasting that food prices will remain relatively tame. There will be niche commodities that do see impacts individually.
Understood. Thank you, Aled. And so far we've been talking about things quite globally, but in practice, are we going to see maybe some countries or some regions like Europe, North America, for example, see quite severe food inflation and other countries or regions getting off quite lightly, or is it more generic?
It is pretty generic in terms of globally we're going to see that food inflation remain tame. But there are, of course, recent events such as issues between Venezuela and the US. That's another thing which perhaps wasn't even happening when we wrote our report, and taking these factors into consideration. We've also got the Trump administration pushing out things like retaliatory tariffs and tariffs off the cuff almost, which will inevitably impact food inflation. So I think we're going to see any country-specific food inflation largely driven by either changes in policy or, of course, those sort of logistical challenges. In terms of global production, that's seeming pretty consistent. So the core levels of kind of inflation are going to stay relatively consistent. It's really those bits on top which are going to impact those individual countries. We did see some countries actually last year. We were talking about how it was perhaps a bit more volatile in 2025, but India dropped its food inflation prices significantly throughout the year, which kind of bucked the trend for most other countries. And we'll see similar this year, whether India will remain low or perhaps even dip a little bit lower. But overall, we are thinking that food inflation is going to be pretty static globally. with the exception, of course, of, as I said, of some of these governmental policies that come in. Here in the UK, we also had some tax changes come in that around businesses having to pay higher national insurance contributions, which is a tax in the UK, and every food retailer, bar a small handful, came out and said that this is going to increase food prices in the UK. We've also got the government policy in Europe that no one seems to know quite what's happening with, in terms of the European Union anti-deforestation regulation that was meant to come in 2024, then postponed to 2025. Now it's being postponed almost to 2026, and actually there's a prediction in the white paper that you're talking about that actually it will not be implemented as well in 2027. So that's our policy team that are predicting that.
Mm-hmm. Okay, well, thank you, Aled. And just one last question from my side, which is, you mentioned beef as being quite a volatile commodity in recent months and likely going into 2026. Would you pinpoint any other commodity in particular as being particularly volatile right now and one to look out for?
Well, certainly sticking within the livestock sector, eggs and chickens have also, for different reasons to beef, but have also had a lot of volatility in recent weeks and months, and will continue to have that volatility as we're starting to see in 2026 already. Mainly these commodities are predominantly affected by things such as livestock diseases. We've seen rapid movements in terms of ups and downs of highly pathogenic avian influenza. We've also seen things such as Newcastle disease, African swine fever. There's been cases of blue tongue in cattle as well. So certainly the livestock sector will likely stay pretty volatile in 2026 because of the uncertainty of things such as livestock diseases, which are almost beyond control of any consumer and most producers as well.
Well, thank you for your insights, Aled, and thank you for your time. And thank you everyone at home, in the office, on the commute, wherever you were watching.